This video is sponsored by PelucidFX.com.
Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
So let's try to understand what is going on the gold market. On the gold market, as we have discussed in our weekly research, we expect some deeper retracement to the upside. The potential target of this retracement is an area around 1630-1635 area due to some reasons, mostly because market stands at the significant support on the weekly time frame and it oversold on the monthly time frame. Well, it doesn't mean that monthly oversold you can take short positions on the intraday charts, but you should understand that market will have the problem to continue move significantly lower, so it will have to struggle with this oversold condition. And in such circumstances, if you decide to trade on the short side of the market on the intraday charts, it usually recommend to take the profit around the previous extreme levels. So if you, for instance, will search the possibility to short with this position, it's better to take profit somewhere around these previous lows, since market is oversold. But currently, we just want to justify why we expect some deeper move to the upside, and particularly by these reasons, by the significant target. So that is nice support on the weekly time frame, and that is also monthly oversold. When market stands at oversold on the higher time frames, on the monthly, on the weekly, it usually leads to deeper retracement on the lower time frames, and very often market hits overboughts on the daily time frame when it recovers from the monthly oversold. That's very common action. You can see that this area is very pretty from point of view of the resistance and is the target. So that could be the first scenario that could materialize on the gold market, is the retracement as the ABCD pattern. So if this low will hold, then we could get A, B, C bottom pattern. 100% extension will stay precisely at the 1630, retested these previous lows. This is around 1625. That is also, as I said, daily overbought. And take a look, major 618, 1635 fib resistance area, 618 resistance. That's very common price action. But there are two another possibilities that could happen on the gold market. The first possibility that is, I suppose, has significant larger probability than the others is some kind of the double bottom pattern. And the market will continue move lower, taking out of these lows with some wash and rinse, grabbing the stops below this significant low, returns right back, and after that will continue move to the upside with this retracement. Why this possibility is possible? why this scenario is possible? Well, because probably you can understand that gold is really cunning market, and it's very rare left the significant areas without clearing out the stops around it. So where gold market likes to grab the stops. That's why probably this could happen. Besides, if you will take a look at the nature of that price action on the intraday charts, you'll see that this is not very impressive, and market hasn't shown until currently any significant recovery to the upside. What we see, in general, the scenario, as you could see, is very similar to the euro currency. So that was some sort of the high wave on Friday. The Monday trading session was inside trading session to the Friday, and now market trying to do an attempt of the pullback. The unconfirmed trend turns bullish, but here and here market, here you can see it has turned trend to the bear. So that price action is a bit looks suspicious. So let's shift to the 4-hour time frame. On the 4-hour time frame, we see the price action is very similar to euro currency again. So nice divergence with the MACD, some sort of the bullish engulfing pattern, the support, small recovery, retracement, and now attempt to continue move higher. So what we see here, we see the stop grabber that suggests probable taking out of these highs. Also we have the bullish pattern, bullish engulfing pattern that suggests some upward continuation if these lows will hold. That's very significant, because as you will see a bit later, market gives us a lot of scenarios, and depending on what particular scenario you will choose to trade the gold market will give you the corresponding areas of invalidation of this scenario and where you should place your stop orders. But again, as I said, this recovery is not very impressive right now. I think that market, after some sort of the ABCD pattern to the upside, could turn to the downside and taking out of these lows, grab the stops and returns right back. That really price action that could happen, especially if you will watch the analysis of the euro currency. There we assume approximately the same action due to some reasons that now stands on the euro currency. Well, on the hourly time frame, it's a bit massive chart, so we can see. Let's try to pass through this mess together. First of all, let's take a look at our bullish engulfing pattern. That could be some sort of the ABCD action. This ABCD target of the 100% extension, and probably market will stop right here, because you can see that the CD leg is much flatter than AB, and that usually leads to significant resistance around 100% extension. Market rare continue move higher if CD leg is rather flat compared to the AB leg. Also take a look that is the 50% resistance of this swing to the downside. So market could stop here. If this will happen, then probably this will be some sort of just guarded triple to sell, initial thrust down, ABCD retracement, continue move down, and that will be the one step in the direction of the double bottom pattern on the daily time frame. But take a look at that area. What we see here. First of all, you can see that here stands the monthly pivot point that hasn't been touched yet. Monthly pivot point of the gold market is around 16.05 approximately, 16.06. It's right here. Also, take a look. If market will show the acceleration to the upside, it will give us the 1618 extension of that ABCD pattern stands at the same area. Slightly higher stands the weekly pivot resistance one. So if market will pass through the weekly pivot point, this is blue line, it could proceed to the weekly pivot resistance one. And what is also significant, that is the 618 extension of the daily time frame ABCD pattern. So if you take a look at the daily time frame, that is the 618 of that pattern. Here is 100%, but 618 stands right here, as it's shown on the hourly time frame. Here it is. So the third scenario, if market will reach this area, could lead us to the butterfly buy pattern on the daily time frame. So it could be retracement right around this area to the 1605 and continue move to the downside as the butterfly buy. But why I think that the probability of this not very significant, because by this swing to the downside, market has reached already the 1618 extension on the weekly time frame, and there are the lack of reason, the lack of necessity for market to show some sort of this butterfly. Usually market forms, very often market forms the butterfly when some target stands slightly below this area. It usually touches this by the right wing of the butterfly and turns to the upside. But here the target already has been touched, so I suspect that the probability of the double bottom is greater than of potential butterfly pattern. But butterfly is also possible. So you can see three possible scenarios here. First of all, this is just ABCD. Second, potential double bottom. And third scenario, the potential for butterfly buy before significant retracement will start. So what we should do in these multiple scenarios, how to act. First of all, the conservative tactic will be to wait for clear and confirmation patterns on intraday charts. As you can see on the hourly time frame, as scenario with this large ABCD on the daily time frame, as scenario with the butterfly suggest some further acceleration to the upside on the intraday charts. The first one suggests move right above, right to the 1630 area, the first scenario, the ABCD on the daily time frame. The scenario with the butterfly suggests continuation only to the 618, but anyway, that market should continue move to the upside. Besides, even this ABCD pattern suggests some further move to the upside, some room for the gold to continue move slightly higher. From that perspective, those of you who want to take the scalp long position could do this against these lows. Because if market will turn to the downside and taken out of this low, that will probably lead to the move to the previous lows on the daily time frame. That will be the road to the challenging of these lows. Until these lows will hold, market could continue move to the upside. So you could try to take the long position and exit either here or here. The conservative tactics will be to wait at minimum the double bottom, as we have discussed in our previous video. So wait when the market will reach these lows, turn to the downside, despite how it will behave on the intraday charts. Just wait for the challenging of these lows. If we will see the grabbing the stops and return right back, fast return above these lows on the intraday charts, it will be obvious that market just grabbing the stops and start to acceleration to the upside, and that the double bottom may be forming. That will be the way how to enter on the long side of the market, and this is the safest way, because you will have the wash and rinse pattern on your back. That will explain that market is really just want to grab stops and ready to the retracement to the upside. And that will be the safest way to act on the gold market. Other scenarios carry a bit more risk, but you can see you could choose any of them. So my choice is probably I don't believe much with this upward appreciation now on the market. Probably I will be focused on the scenario with the double bottom pattern. If market will reach this area before turning to the downside, around 60.05, then probably I will be watching for potential butterfly buy. But this will depend how market will behave on the intraday charts. If we will see real appreciation with the strong candles to the upside, then probably also could suggest that market still turn to this ABCD pattern. So you can see a lot of nuances here. So just watch how market will behave on the intraday charts and choose your preferable scenario. Again, the safest way is to watch for possible wash and rinse of the previous lows and hope on potential double bottom pattern on the daily time frame. Other scenarios will assume that you will keep an eye on the action on the intraday charts. So if on the hourly time frame we will see some thrust and acceleration with the big candles to the upside, market will accelerate further. Well, that in fact could mean that probably ABCD pattern could start. And it will be valid until market will take it out of these lows. So keep your eyes open and watch closely what will happen on the market.